We're gonna shift gears and take a look at what we're seeing with the broader markets. Obviously, a lot for everyone to unpack here. We're going to take a look at what might be in store for 2023. Now, forecasts see pressure ahead as companies face growing recession risks. But what role could the US dollar play in all of this? I mean, we know that as we saw the yields rise, we saw a lot of people going into the US dollar for safety, wondering what would happen with recession fears, and that's obviously affecting a lot of companies, multinational companies with exposure in overseas markets. Akiko.
Yeah, although we have seen the dollar index come down since the end of November, about 8% right now. And that's kind of been the story here. When you think about what's been playing out among corporates in 2022, it really has been about the strength of the dollar. Now, we've got some companies who are especially exposed to all of this: Nike, IBM, P&G, Hasbro, Caterpillar, Qualcomm. I mean, basically any company that has a significant exposure outside of the U.S. The stronger dollar obviously makes those foreign revenue less valuable when they bring it back into the U.S. So, you could argue that as we've seen the dollar weakening, that would potentially be good news for some of these corporate earnings. Now, having said that, it's the reason behind the weakening of the dollar that's raised questions about where things could go going into next year. I want to point out a note from Wells Fargo saying they expect a rally in Q1 before things start to weaken. And they've talked about the dollar falling as much as 10%. A lot of that has to do with where the Fed's likely to move, even though the rate hikes are likely to slow down. That's partly because of the recessionary concerns. That is likely to pull back on the dollar even further. And right now we're looking at 104.11. Again, worth noting that at the end of November, we're looking at roughly somewhere around 114.
I mean, and when we look at some of these predictions for where we could see the S&P going, we know that Morgan Stanley's chief equity strategist, Mike Wilson, he sees the S&P falling as much as 21% in Q1, recovering, though, to about 3,900 by the end of 2023. We saw similar bearishness also from Bank of America as well. They're also expecting that the earnings outlook will deteriorate next year. And a lot of this, the turning point in what they're considering, which might push equities back up, is whether or not the Fed will halt when it comes to these Fed rate hikes. So a lot of big ifs, because there's a lot of data that can come out between now and then that we know the Fed is data dependent. So we'll be keeping an eye on that.